Jesus. What's going on? Science of Getting Rich in chapter 6 says, when I say you do not have to drive sharp bargains, I do not mean you do not have to drive any bargains at all, or that you are above the necessity for having any dealings with your fellow man. I mean that you will not need to deal with them unfairly. You do not have to get something for nothing, but give to every man more in use value than you take for them in monetary value. If you haven't read that book, you should. It's available free, man. You can get to it. You can get to it right from my bio link there. Hold on just a second here. Anyway. So, like a lot of you, I came to the stock market the same way. Like many people want to make some money. Maybe you want to invest. A lot of people come to the markets for different reasons. We're not all doing the same thing. It doesn't serve necessarily the same purpose for you as for me. The market can be whatever you want it to be. It really can. And there's a lot of ways to approach the stock market. There's a lot of ways to try to use it. And I think what I've found along the way is the clearer I get to what it is I'm trying to do, the more possible that outcome is. And so clarity, personal clarity, who am I? What am I trying to accomplish? What is it that I want to do? Who am I trying to be? Like that can be lived out in here because the markets can assist you to getting where you're trying to go. I've talked to countless people who bought their first investment property or real estate property from earnings and gains or profits, whatever you want to call it, from the stock market. I've met people who bought luxury cars and watches from money they made in the stock market. Meaning they put some in, it went up, they took it out, they bought what it is they came to buy. And they used it, man. You can do the same thing with the real estate markets, any market, right? Because that's the purpose of the market. The purpose of the market is to help you get what it is you want to get, man. So the clearer you get with that, the easier some of this gets. Now I can just run through the money flow trading strategy and some of the basics, and I do that all the time. Repetition is the mother of skill. And I always try to find the clearest chart pattern that I can get for the phenomena or the effect or the pattern. It's a fractal pattern, really. It's a pattern that we see play out on price charts. Price charts are just pictures into movement. Just the day-to-day activity of an item, a commodity, a stock, a piece of equity, a bond. This here is just mapping price. This is fourth grade fucking math. If you look to the right, you see prices, right? And if you look up top, you see some others. And you've done these in math class in sixth grade, right? Where you would plot shit on a thing. And all that is simply price, man. This is just price. Up and down. Sometimes they go up, sometimes they go down. And that pattern of price, here's the funny thing. This is why I'm saying this is all-encompassing. It doesn't care what kind of day you were having back here, right? Or here, to change directions. It didn't ask you, doesn't really give a shit. Doesn't really care what price you bought it at either. Let me let you in on that. The stock market doesn't care what price you bought it because everybody's entering the stock market for the first time on some day of the week. So everyone gets started at some time because people come at it at different ages. You can't start playing the game. Well, you can, but most people don't until they're over the age of 18, right? Some people start younger. There's nothing to keep you out, you know. And it doesn't matter as it's going through its flow. The market could have been ripping for the last 2 months on the day you decided to get involved. Or it could have went the other way. This could have been his first day to ever buy a stock, and that could have been your first day. 2 different fucking experiences, same stock. Stock market doesn't care. You see how that up and down goes? And so as you do this, depending on how you play this game, you could be playing for accumulation. Well, you can use the stock market to accumulate and build wealth. I don't know if you know this or not. You can just use it. You just buy shit on sale. That's what you're always trying to do, you know. And you can sell that shit when it goes up. And when it goes down, you could say, maybe I'll wait. Maybe I'll cut my losses. What kind of person are you? That isn't that hard a conversation. That's a conversation you have with yourself, man. Some people don't like to lose. Well, if you don't like to lose, you don't have to go against your nature. You could just build a strategy around your nature. Market's going to go up, market's going to go down. And one of the things that I figured out is I really don't know what direction it's going. And that even people who think they know can be wrong. Warren Buffett sold Delta Airlines right at the bottom, and he's way smarter than you are. Let that sink in. Let that sink in. He sold Delta Airlines at the bottom when we started buying. And he's way smarter than we are. So, in my journey of the stock market, like a lot of people, I began to read books and I became obsessed with trading. I wanted to buy here and sell up here. Or sell it here and cover down here. That's what I wanted to do. I wanted to trade in and out of the market. And this right here is just a price chart. There's no indicators on here. It's just price. And everyone starts with the same. If you go get a charting service, it's probably not going to have little bars though. So if you've got my course, Getting Started with Stock Charts, the Money Flow Way, you know, we play with this stuff down in here and try to set it up like the money flow. And I try to explain why. This is the way most people trade. The only reason you trade like this is they fucking told you to. They just gave you the thing and it already looked like that, so you just stay with it. Or you have the misfortune of starting out as a Forex trader. Forex traders love the candlesticks. Now, there's nothing wrong with candlesticks. I just don't use candlesticks. But there's nothing wrong with candlesticks. They do the exact same thing as bars. And you can set these colors, like red means it opened higher than it closed. And so the candle moved down, right? And the body tells us the open and the close. And the wicks tell us the tops and the bottoms, right? It's the same shit, man. It doesn't matter if it's a candlestick, right? It's going to give us the same information, whether it's a candlestick or whether it's bars. I just like bars, man. So there you go. Gives you the same information. Now, as you look at this, when you're new at this and you're looking at it, it doesn't mean it's fucking chaos, man. Red candle, black candle, red candle, black candle, red candle, black candle, red candle, black candle. At what point, if you just had a pencil, can you say, okay, this is going down? And then at what point, if you just had a pencil, you could say, hey, this is going up. See, the problem is we have to do that shit in real time. We can't just look back. See, like, I get a lot of people, like, there's this constant expectation of a housing crisis because we had one before. Just one. And whatever has happened in the past, traders, investors hold on to, anticipating that it'll happen again. Except it's never the fucking same. I don't know if people just don't get this, But there was only one great housing crisis in 2008. It didn't happen in 84. It was different shit, man. Different reasons. There were banking, savings and loan crises, right? There were oil shortages. There's the Korean War, World War II. Like, it's always something different, man. But everybody's waiting on the last thing. Everybody's waiting on the last thing. And it's just human nature. You just expect it. The problem is it's going to be shit you're not even thinking about. You know, one day there was an iPhone, one day there wasn't. Like, we weren't thinking about it, man. One of the basic tenets of the money flow trading strategy, at worst price has been before, when it's going down, we typically anticipate it'll stop there again. And where it's been before is these places it creates little boxes. See these little boxes? These are zones where price gets hung up. Now this one is a pretty illustrative chart. That's why I grabbed this one. I mean, this one's pretty picture perfect. And you see it go down, kind of stop right there, go down, stop right there, and then what? Go down. And it's fallen. Well, guess what? On the way back up, it does the same thing, man. And if that characteristic of price is true, now here's the thing. I don't know that it's going to be true. I just assume that it is. I assume that it is. If you're playing games of chance, poker, chess, these are games of chance. There's combinations. There's only so many moves, right? Well, there's only so many moves here. And in chess or poker or blackjack, you can just get lucky, get handed a good hand, right? You can. Remember I said in the beginning, you could just start in the stock market right here. Maybe that was your first day. Well, fuck, this looks easy. It's just going up, man. Well, if your first day was over here, how do we now make sense of here and get into some kind of flow? Well, I call that the money flow, man. And this didn't come to me, boom, like that. It came book after book after book, studying, watching, and I haven't even got into all the fucking indicators. We're going to get to that. People, jumping right to indicators is not a good idea because they skip the flow of price, man. Do you understand the difference between a candlestick and a bar? Have you stopped right fucking there and just look at one day? What does this mean? This is where it opened. That was the very low. That was where it closed. And this was the very high. And I mean, zoom it in, man. This is where I am. $17.57. We've had 4 consecutive up days, one down day followed by another 4 or 5 consecutive up days by a down day, right? I know you do this. You take every stock and you stop and you look at it and you begin to dissect it, work it backwards. Where are we inside the bigger picture of the money flow, price direction? Because whatever direction it's going, I'm assuming it's going to keep going until it hits a place where it stopped before. And that's how you get things like support and resistance that you hear other people teach on. It's because price has memory. And we just assume that's going to be true. I don't know what fucking direction it's going. I know what direction it's going right now. And based on what it's doing right now, I can make a decision. And that right now is not one day. It's a box of days, a group of days, right? And as long as these groups of days continue to print higher, they'll move, right? Over an estimated period of time, we can make it an assumption. So if I'm looking at this, it was going down, 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 down. And then one day it wasn't. And that day was the very low. Very often you're going to see it's going to be, now watch, I'm going to show you something. And as soon as I show you this, it'll fuck your head all up and you'll misuse it. See that? Notice that one. Do you notice something? You don't see the cross? What does that mean? Price opened and price closed at the exact same price, creating a cross. It's a reversal. They hit the equilibrium. There's not more sellers than buyers. There's not more buyers than sellers. We fucking agree. An agreement, and I've been talking about this last week, is where price comes together. I was playing that Beatles song you were supposed to go listen to. These are pivot points. It's where price pivoted. And in order to anticipate the future ones, we need to know the past ones. Where price has been before, price will go again and often get hung up. But if it breaks through it, we assume it goes to the next one. So I assume price is going to get stopped right around in here. It's where it stopped before. If it gets through it, I assume it's going to this one. Now, if I can make these assumptions up here, maybe I can make them down here. And if I get them in a line and the price just follows what the pattern that I began to see, and not just me. Let me pull this up. Other people have taught this pattern, and it's talked about, and you cursory, market moves in 4 stages, and then they move on. They say it haphazardly. Yeah, it moves in accumulation, a breakout or an uptrend, a markup, whatever you want to call it, where price moves higher, right? And then what? It stops going. No. That's distribution. Price begins to pause. Price begins to build a box. It looks the same every time. And I'd watch it. I'd say, okay, but even though I can see it and I can see what it's doing because I've seen others, I still don't know direction. I don't know if it's going to go up or down. I just know what it does do, right? It'll activate. Where's our let me check something real quick. People always want to know, what stock should I buy? Man, you don't need to know what fucking stock to buy. That's kids play. You can literally Google top 10 stocks. Shit ain't complicated, man. It ain't complicated to pick the best stocks. You just got to give a shit. Oh, did that hurt your feelings? Wait, this guy's saying it's easy. Yes, it is very easy. It's very easy to build wealth. Super fucking easy. And if you're not doing it, you're a complete dipshit. That's reality. People you got to find some expert. No, you do not. You need common sense. How can you say that? What do you mean? You need common sense. Because all you have to do is once you've learned how to look at a chart, you go to a weekly, a monthly, you can take it back a decade, 10 years, 100 years, and it just goes up. Your entire fucking dad's life, the market went up. Your mothers, your grandfathers, their grandfathers, it's just gone straight fucking up. Housing prices have gone up. There's been more people born. There's less companies due to mergers and technology. So there's less product, there's less. It's scarcity. It seems like there's a lot of stocks. When I started trading stocks, there were 9,000 stocks you could buy. There are not 9,000 now. It's about 4. And of the 4, maybe 1,000 of them are actually legitimate, real things you would actually even want to fuck with. Right? And then if we even narrowed it down from there, we could get down to like the top 100 companies in America, just fucking obviously Adobe, Uber. Like you can just with the slightest of research determine who are the top 100 tech stocks in America. Who are the big players? Who are the big fish? The McDonald's, the Pepsis. Who are those? This is like a one-day class. People don't do because they just don't do that. You could just Google it right now. Like this is how easy it is. Google and you type in top 20 dividend stocks. Right? Then you click it. Now, is that going to be the top 20 dividend stocks? No, but it's going to be a pretty good list, I bet. Now, when I take that list and I come and I lay them over these charts, and I come over here and I say, let's build a chart list. And I go over here and you notice I have some that say 10 stocks under $10. How many stocks are in this thing? These are stocks that I've come across. They're real companies. I've read on them. I look at shit. How many are on this list? Let's hit edit list. So there's 147 of them that I'm following. 147 of them. What other lists? There's leveraged funds. Leveraged. They move 3 times. So they move 3 times the market, 3 times the index, 3 times the bond, 3 times the gold, 3 times the oil, 3 times. 5,000 is like having a $15,000 trade, you know? So what happens when you get that right here? What happens when you have a pattern, an expectation, you begin to develop this edge? You got to prove that out for yourself. I ain't got to prove shit. I do it every day, been doing it. You got to prove it out because I don't know you, and I don't know if you'll follow it. I don't know if you're going to notice that cross and notice this cross, right? I don't know if you're going to get very intimate with these. Why do we have this green? This right here is the 20-day simple moving average. Why? Why is it 20, bro, and not 18? Why? Have you sat and played with it? You know, fuck me. Say it's 18. I think it's 18, bro. I think you got it wrong. You get what I'm saying? Like, go look. There's a reason I use this 20. And there's a reason it's a simple and not an exponential or a weighted. Do you know what a weighted moving average is? You should know what a weighted moving average. These are the things you fill your time with and not erratic stock trading. So as you begin building out your portfolio, right, and trading like a sane person and not a lunatic, right? You're not following, you're not taking anonymous 40 character fucking things and that's all you're executing on. Like you're in the actual flow of stocks, some of the greatest companies in America, and you're watching them go sideways. Oh, breakout. Oh, wait, what is that? Whenever we get a breakout, that's price breaking above that green line, the 20-day moving average. We then make the assumption because the money flow says when price moves in 4 stages, it goes sideways, and then it doesn't, and it goes up, and then it keeps going up, and then it doesn't, and it stops, and it goes sideways, and then it stops, and then it doesn't, and it goes down. Or maybe here it breaks out again. What would that mean? That means this 3, a 3 is a 1, yin and yang, high tide, low tide, man, sun and moon. This shit is the same as this down here. The only difference between distribution and accumulation is the distance and what direction does it break out. Meaning you can go into distribution, but then people say, hey, this asset is still too cheap. It's still too cheap. And there's a catalyst to take it higher. And distribution turns into accumulation. But you're not going to see that if you're not looking at that each day, looking at each bar. Where did it open? Where did it close? Where is support? What stage am I in? Where are the indicators? Where is price in relation to the 5-day, 10-day, 20-day? Where's the MACD? It's like, where are the hits? Like you can go right through that like that. That's what you're practicing on. And if you're not doing that, man, we're not even going to talk about options, dude. If you can't do what I just said there, are you out of your fucking mind? So once you get what I just showed you there, options gets a lot easier for you. There's no point in doing the other things if that confused you, man. So if we're looking at this is one I put on the other day, the file coin. I don't know, we're up 30, 40%. I mean, look at this big move we've had. Here's the stage 1, right? There's our breakout, right? Where had price been before? Right there, right? And the next one is what? Maybe right in here. And if that one breaks, where's the next one? Right here. This is Filecoin, right? So it runs up. It goes into its stage 3, right? There's our stage 3. Started right in here. Built this out. Does it break down? That's the pattern, right? No. Broke up. It's breaking up, man. It's not breaking down. What made this trade somewhat, I mean, to me obvious, not necessarily obvious, was the fact that its underlying index, Ethereum, broke out, and this did not. I mean, barely. Look. So when we back this and we go, this is big picture now. So if we look at ETH on this day right here, Ethereum broke out of the box of the stage 3 it had been building since over here, right? Where we hit the extreme, price started going sideways. You can see it, man. Look, it's going sideways. You can see it. You see it? All the moving averages are coming together. What is that telling you? When they come together like that, it's the end. This thing's either going to break up or break down. It's not going to just keep doing that shit. It's coming to a point. Come together. The moving averages are coming together. I don't know what direction. People who think they know direction are fucking delusional. They don't know. You can take a guess. You could have a betting scheme. You could say, I think it's going up whenever it's really undervalued. So whenever that come together pattern happens, I bet to the upside. But that doesn't mean you actually know. So you have to operate. And the reason I overemphasize this all the time is you need to understand that you're operating in uncertainty. Crazy shit could happen tomorrow. That's what makes options so risky, is the time decay, because we don't know time. Fuck, if I knew the time, I'd be a billionaire. Time is the one thing we don't know. And so ultimately you can be right. And let's say they say this stock's worth $25. That doesn't mean it won't go to $9 first. Market sentiments change. It doesn't look good for your company. Doesn't mean your company's going out of business. It just means people don't value it the same anymore. So if you're DS in a golf company and you were trading at $5 pre-COVID, well, fuck, nobody's playing golf. So they're going to take it down to whatever, right? And then as people come back playing golf, guess what? It moves up. But then you misstep on earnings, and guess what? It goes down. But then you fix that, right? And so price just moves, man. It moves through these stages. And what you're seeing right here, this one's better, where there's no lines. This is listen, what you're seeing when you look at these charts, this is just the emotions of people. These are the people making the decision ahead of you. These are the people that have reacted based on something they read or something they saw, where they react immediately. Immediately. Matter of fact, it might even be a computer. It might even be a computer who reads headlines based on algorithms. So on that day, everyone in America agreed. And on that day, everyone in America agreed. The human emotion that ties up in this chart from this stage 3 to stage 4 decline, that then turned into a stage 1, that then what? Broke out into a stage 2 breakout. I mean, we don't need the moving average on there to show us that, right? But we can do it. This indicator right here in the money flow. If you have my book, The Money Flow, man, page 70, I talk about the True Strength Index. This was developed by a guy named William Blue. Now, a lot of your software won't have it. One of the reasons I stay with stock charts is they have the TSI indicator. And I don't talk a lot about it because a lot of your indicators, your software platforms don't have it. And so then I have to entertain that question back and forth. TSI is one of my favorites, so it's very similar to the RSI in that when price is down here, so here's the center line. They call this the center line. What is happening here is there's about 5 math calculations going on, and based on those math calculations, this is being drawn or plotted. Back in the day, you would do this by hand. They would take the open, the close, the previous high, back up, blah, blah, blah. They had some formula, and then they would plot it, and then they would hand draw it. Well, today, computers do that for you, right? And here we are, we get a reversal candle, or what they call a doji if you're into the Japanese candlesticks. You're going to notice that doji happens also when the TSI is on a really big extreme to the bottom. It's below the -20. And you'll see the -20 and the +40, right? You'll see those on the indicator platform right down there, right? And price, so this also, in addition, the MACD is same thing, moving average, convergence, divergence. If you just say that name out loud, it's a math formula. It's moving averages. It's taking an average of days. So 1 day, 2 day, 3 day, 4 day. Like this indicator is created by taking these days and plugging it into a math formula and then plotting it down here. And what people who study charts or study price movement begin to find is often when this thing goes into the -20 or RSI goes -30, they're very similar, right? You're going to have price change. Just like you did over here, you're going to have price change as price fluctuates, swinging from too high to too low. Hold on, something's going on with my thing here. Now, what do chartists do? Chartists watch that, looking for signs of reversal. Well, there's a reversal candle. Ding, ding, ding. We look down at the TSI, and we could say, okay, maybe you don't jump just because you get a reversal candle, but hey, the bottom is probably in. And now you start looking, is this the bottom? And you can draw a trend line. What do we need? I need 4 bars to tell me we've put in a bottom, right? So 1, 2, 3, 4. That'd be 4. It's not a lot, though. But then I look down and what? The TSI's crossed. So not only is the TSI work like the relative strength index, RSI, giving you extreme lows and extreme highs, when it does its rollover, where the black line crosses the red to the upside, price tends to have bottom, be breaking out. And if you notice what happens, I got my box and I'm breaking out. So what does that mean? You get long. That's the first day of the confirmation that the trend just changed. You now officially have a stage 2 breakout. All we looked at is a box, a pivot point, a reversal candle, and the TSI. We ain't even plotted on here the 5-day, the 20-day, the 10-day, or MACD, or Stochastic, or RSI. Like we're looking at this, just stripped it down. Man, I don't need any of that bullshit. I've been following these so closely. I know what they're going to do. I know what it looks like when this happens. Like, as I watch the bars each day, I don't even need to look at the indicators to know what they're doing. I've been looking at them. If you've played chess a couple times, you know what it looks like when the guy slides his rook over. If you've played blackjack a few times, when they see you get it, right? Like, if you played tennis, if you play the piano, where's price probably going to stop? Shit, probably where it stopped before. And you're going to get the movement, right? We'll keep going, man. Oh, man, oh, man, oh, man, oh, man. Hold on, give me just a second. What's going on here? All right. Developed by William Blue and first shown in Stock and Commodities magazine, the True Strength Index is a momentum oscillator based on a double smoothing of price changes. Even though several steps are needed for calculation, the indicator is pretty straightforward. By smoothing price changes, TSI captures the ebbs and flows of price action with a steadier line that filters out the noise. As with most momentum oscillators, chartists can derive signals from overbought, oversold readings, centerline crossovers, bullish and bearish divergence, and signal line crossovers. You don't even need to use it for all of that. What I'm looking for is it to help me identify tops and bottoms, man. And for tops, it's because I want to sell into it. And for bottoms, it's because I want to buy into it. I'm not even trying to be 100% correct. I don't need to be, man. I don't need to be if the thing I'm trading is undervalued. Maybe I don't even need stops. Maybe I'm just buying things that I have a lot of conviction in, and I'm using the stage ones to accumulate more. Or you're like, yeah, not for me. Okay, so you implement procedures that get you stopped out if it goes against you. And if it goes for you, you have targets set. And the way you win is the number of wins have to exceed the number of losses. That ain't complicated, is it? That ain't complicated. The hard part of that is getting you to do it. That's the hard part of that. But that's self-awareness, man. That's self-awareness, man. Some people can't handle being down 20, 30% in something. They don't like that. Okay? All right. So if that's you, well, you can't think like that and be an investor, I hope you know. As a trader, I get it. You don't want your capital tied up in something moving down, so we have to begin to deep dive a little bit. And what the fuck are you trying to accomplish here? What is the purpose of this account? What is it for? Once we can define what is this account for that you have money in, it'll change the way you approach the money flow. And so if your mind's all fucked up, your life's all fucked up, bucket's all fucked up, guess what you're going to be in the market? All fucked up. You're going to get out of it what you see, man. You're going to get a reflection. You're a gambler. You like that quick money? Oh, they got a game for you. Market will give you what you want, man. And I don't even mean that in a bad way. I'm just saying, if that's what you like, they got it. You take this money flow shit here, and you master it. You don't give a fuck what anybody else is doing. You learn this, and then you just trade triple leveraged funds, man. Uh-oh. You didn't know you could do that? So you come over here, man, you don't need to buy. Let's take the TQ. This is a triple leverage fund. I think I'm up like 51% on the year on this. Like, there ain't a lot to do, man. You want to take it down when it gets extreme, and then when it gets donkey punched, you want to start trying to pick up the bottoms on this. Technology's not going to zero, dude. You get what I'm saying? So that might change the way you played this once you understand leveraged funds. So if oil gets donkey punched, if gold gets donkey, oh, and it will in your lifetime. Listen to what I'm saying. I'm not saying this maybe plays out today, maybe next month. Maybe bonds just get obliterated. Maybe Korea or Brazil or India or Russia, or maybe there's a country called China and it just gets obliterated. And you don't even like the stocks. Shit, you don't even necessarily like the country. It don't mean you can't play the money flow inside of the price movement, right? So this is a triple leverage Chinese play. This is when you're gambling a little bit. You're speculating, but you're speculating with the leverage. I don't think China's going to zero. I'm not using any stops. What I am thinking is that it's going back up. Maybe I'm wrong. But if I'm right, it's a lot more than I'm going to lose. Okay? And I'm patient. And it's not my whole fucking bankroll. Like, calm down. It's just one thing, man. It's one thing in 80 things. Get what I'm saying? I've been doing it for more than a couple of days, so I have a little bit more money probably. So I have about $1 million in the stock market. And I make decisions, not day to day. It's too goddamn much money to be trying to do it like that. But I am trying to weight myself based on what I see as risk reward in front of me. I'm perfectly understanding that markets go down. Good. Right? This is why I own large amounts of dividend stocks, so that if we do go down, I get free shares cheaper. In other words, the money they give me on the dividend, I have it reinvest into more shares, so that when we do come back up, and we always have, I have more money than when we went down. It's fucking foolproof. I guess well, you can't say that. Okay. It's about as I can get. Let me put it that way. Because for all of my life, the market has come back. Not every single stock. Right? Not every stock. One of my investments, Ford, stopped paying a dividend and the stock fell to $4. Remember that? So if we're looking at this, where do you think I sold some Ford? We're looking at the money flow. I sold some Ford up in here. Actually, right in here too. Why? We'd had tremendous gains, man. We're buying at 11, buying at 7, buying at 4, all the stage ones. And then it had humongous returns. So what do? Not humongous, but big. Take them down, man. Now what, though? Now it's come back down. What are we seeing now? I don't know. Maybe it's almost time to start picking it back up. Is this price worth that? Has it ever been down here before? Well, shit, that's where it was before, right? So you see how the nature of this position has a different feel for me than over here. Over here, it's an opportunity to take some off. Over here, I'm now thinking, is it time to put it back on? This is where we go and look and research, right? That's not trading. I mean, it is, in a sense. That's asset accumulation, right? It's a little different, man. That's different. It's still the same money flow, man. And that's why I say there's a lot of ways to play the money flow. I don't know you, man. I don't know your goals. I don't know what you're trying to accomplish. So if you're 18 years old and you're putting money in AT&T, okay. I mean, in 70 years, you'll be happy. I don't know that that's the play, you know? How is a stock that doesn't go up or down going to get you to where you're trying to go? Make sense? But if I'm 65 years old and I got $100,000 to invest, well, shit, AT&T will give me $5,000 a year for holding the shares. And I know it doesn't go up or down much. Fuck, I've been watching it for 40 years, right? So I go over here and I look, and you know, all right, has it been here before? Where did it stop, right? Where the fuck it stopped last time? Look at that. And then went up. Then came down and stopped right where it was, man. Crazy. Anyway, see? So this is different. If you're sick looking at this, like, oh, what's it going to do? Go from 27 to 30? Ooh, big trade, right? Now, we were hoping, we tried to play it in here, we'd get a breakout. And that's a slow-moving trade, man. So the trade for me, if I wanted to trade this, would be I need to accumulate a lot, right? I want these stage ones so that I can buy all the stage ones down, trying to what? Get the price down, because I'm trying to get well, this one would be down here, actually. Come on, man. Be right over in here. Why? Because I'm trying to sell it up here. And in this scenario, I'm going to use time, right? I know it's not running up there anytime fucking soon. I know that. So I'm using all weakness to add so that when it does run, I turn 27,000 into 32,000, but I got paid, 6% to play that game. Now you may look at that and go, I don't want to tie money up in that. Well, again, we're the money that you're looking at the money flow and you're saying, who am I? What am I trying to accomplish? And so the clearer you get with that money, and it might be different for each account, right? So my buy and hold account is going to be different. I'm trying to pull something up. Hold on just a second. Buy and hold, huh? But maybe not. That's what I'm saying. Man, the market brings so much. It gives you what you want, man. So, this is my buy and hold. None of these are flashy. Blackstone's done well. Pepsi, Southern, Hanes brands. They make the underwear company, right? T-shirts. McDonald's. We got MO, it's cigarette stock, about a 5% dividend yield. Verizon, 4.5% dividend yield. Starbucks, about a 2% dividend yield. MFA is a mortgage broker. We got Walmart. We know Walmart. This is just a big. Pfizer. Pfizer's done pretty well. We're up like 43% a year, I guess, on that. But I've owned this a long time. Welltower, VTR, ARC. I only pick this up when it's on sale. Otherwise, I don't give a shit. If it goes high, I sell it. Nucor, Chevron, again, steel company, oil company, Bitcoin, Gilead, right? Look at these are just boring companies, man. FE, I think we're up like 40-something%. If you remember, that was a utility company that got just donkey punched. And they were indicted for corruption charges, but it's the largest utility company in the state of Oregon. And what did it do? It went into a big stage 4 decline. And what did we do? Waited. When it stopped dropping, what do we do? We start accumulating. Because the stock dropped, it went down humongous for something that wasn't going to put them out of business, man. So we're able to use our brains as we're in the money flow of the fucking universe, reading, looking at Barron's, watching the markets, right? Not just Reddit, not just Twitter, like actually like a big grown-up person stepping back, reading actual articles, right? Not just fucking snippets. You know, you got to have an attention span more than a minute, okay? It's got to be bigger than a bumblebee. You've got to have the ability to make yourself sit down and read and take in information. You cannot take the opinions of other people all the time. In other words, you have to be able to listen to opinions and form opinions. And one thing I've noticed a lot of people do is they bring politics into their fucking trading. The market don't give a shit about your politics at all, okay? It really doesn't. Or mine. It doesn't care about left wing or conservatism. None of that shit, man. It don't know what color you are. It don't know how old you are. It don't know any of that shit. Money's trying to make money, period. We're the ones that get it all emotional. Tie it up into things. Money don't give a fuck who's carrying it, who's doing what with it. It's going to find its way to the person that wants it. That's how it's going to happen. Money flows, man. That's where it comes from. You just walk into a mall and look around and you say, can I see the money flow? You ever do this, man? I do this when I walk into a restaurant. I zone in. Who's the person trying to get me to give them money? And whenever you see that part of the process broken down, you know you're going to have a bad experience. If they can't get that part good, you know, how the fuck are they going to do anything else? Watch Apple. They're like masters at it. Get you in line you, take you through. You walk out owing them $1,500. It's fucking amazing. The point to that is, when you take and realize the money flow is not just a chart pattern, it's a way of seeing things. That money flows. Money flows, man. So when they say, hey, we're going to print $1 trillion, how can anybody go, we're going to have a stock market crash? Okay, well, what about the $1 trillion? Like, it's going to go into assets. Where do you think money goes? If you take all your money and spend it at the store, the people that own the store invest the money. Like, if you're a landlord and you own, like I own 16 houses, when everyone pays me rent, I invest a lot of that money. What does that do? That gives me more money. So if you go out and print a bunch of money so that people spend money and companies get money, it's all so the money all goes back to the 7% that own the assets that produce the cash flow, that produce the products, that produce the food and the electricity and the video games and the entertainment, and own the restaurants and the stores and the streets and the government. Everybody that owns shit, all that money comes back to them. And the reason they own shit is they buy shit. And so when you give them a lot of money, they go buy more shit. They go buy more stocks, more real estate. If you just give me money, Monday I'm going to buy stocks or real estate. And if your thought is, well, if you just give me money on Monday, I'm going to go buy a new truck. Good. I like that. That's who gives us the fucking money, man. Get it? That's what Robert Kiyosaki was talking about. And Rich Dad Poor Dad. It's just getting on the other side of the cash register. And one way you can do that is through stock ownership. It's not the only way. It's not the fastest way. The fastest way is to own a business. The fastest way is to own a business where people bring you money every day. My dad used to ask me, why do you own rental properties? So people bring me money? Seemed pretty simple.